One of the hardest things about trading is simply not trading. If you break a stop loss level once in a bank, you might be lucky and get a written warning. If you break it twice, you're gone. Eventually, one of them said yes on the spot foreign exchange desk. So I thought this would be really exciting. I'll go there, I'll learn. Then basically I spent 6 months going in there every morning, going out and getting their breakfast and coming back. Within 3 or 4 years, I was running the desk that I was on. And then ultimately I became the head of proprietary trading.
You've been working with TradeDay for some time now and mentoring our students.
When I talk through how I feel when I'm in a trade, it's not dissimilar to how they feel. Where the difference comes is I have those feelings, but I've been bred to not act on them. That doesn't mean to say they don't exist within me.
What kind of advice would you give on a trader passing evaluation and then moving into that sort of funded account scenario?
The key thing is,
I'm going to start by asking you a little bit about your markets journey, really. You know, how did you come into financial markets? What asset classes have you looked at in the past? And, you know, how did it all begin for you?
So I think I'm just coming up to 30 years in the markets, which has been quite some time. I got into it at a very young age, around about 17. I started out, I did work experience when I was at college. Got a good reference from them and from a bank, but obviously at that time I knew that I really wanted to get into trading and the excitement of trading. So I went to the bank that I'd done my previous work experience with and applied for their treasury. As was the case in those days, you went into a kind of menial job within the treasury function and looked to work your way up, and I kind of bullied my way in there by getting chatting to the traders every day. They worked in this almost like glass box where the rest of us who were doing just their trade support, and it looked so exciting. So I just got speaking to these guys. Then I kind of started saying, look, they started at 7 a.m, my job started at 9 a.m. I said, look, can I come in early? Can I just sit with you? Eventually one of them said yes on the spot foreign exchange desk. So I thought this would be really exciting. I'll go there, I'll learn. Then basically I spent 6 months going in there every morning, going out and getting their breakfast and coming back.
I was going to say that, going on the coffee breakfast run, right?
Absolutely. But ultimately, it wasn't too long after that, one of the senior guys left and they said, look, let's give this guy a chance. So I seem to remember after my first day of being on the desk, went home and my mum was asking me, how did you think today went? And the swear word count directed towards me was so high that I didn't believe for a second that I was going to get, I was even going to make the end of the week.
Sure.
But ultimately it set me on the path. So I started there on the foreign exchange trading desk, where I stayed for about 3 or so years. And I was looking to kind of shake off the junior. I didn't want to be buying people's breakfast all my life.
No.
So I moved to a bank of a sort of equivalent size, just to kind of get that to the senior level. And I enjoyed it there. It's a slightly smaller bank, but within 3 or 4 years I was running the desk that I was on. And then ultimately I became the head of proprietary trading. So that encompassed for all the foreign exchange trading and interest rate futures trading as well. So I stayed there for around about 14 years and just kind of grew. And I had a real strong ethos of always wanting to bring, I never employed externally. I always wanted to bring people in. And I always brought them from but zero knowledge up to the level. I just felt that was the way that we could kind of get everyone working in the same direction. And so from there, I wanted to go into kind of fund management. So I kind of made a bit of a misstep in the fact that I was approached and joined this company, and unfortunately the person that I was speaking to hadn't quite got the FCA regulation that he'd promised me he'd got. Now obviously it was a big disappointment, but whilst I was still waiting, as he was assuring me it was coming, another business that he was invested in was a trading academy. This is where you and I met. So whilst I was waiting, he just sort of said, look, can you just go and speak to these guys? Now, it wasn't one of these get rich quick, proper academic level academy. So I got involved, gradually enjoyed it, and after a year or so, I ended up running it for him, which I thoroughly enjoyed. Really, it was, as I can't emphasize enough, it was a proper academic experience. We provided degree and MBA modules for programs in the UK and the US. Thoroughly enjoyed that time. The students enjoyed speaking to someone who'd actually practically done this and still was doing it with my own money. But ultimately, much as I was enjoying it, I thoroughly missed trading. Yes. I was still trading my own money, but for me, that wasn't enough. Yeah. When you're used to trading larger sums of money, yes, that's what you want to do. So then I went and worked with an asset manager, where, again, we worked together there as well. And I now work at a couple of other asset managers, helping and advising on trading, which encompasses not just foreign exchange and interest rate futures, but looking at bonds, corporate bonds, equities, basically anything that's moving.
So there was that kind of segue. Yes, I sort of obviously know a lot of your journey, but it was a real sort of like, almost like an older, which we don't see anymore, almost like an apprenticeship. You kind of came in straight from school, very young on the foreign exchange side, sort of elbows out and pushed your way in sort of thing. And that's the way it was a little bit back in we're talking about late 80s, early 90s, right? Sort of that sort of time.
Yeah, well, 90, I think 96 I started.
Oh, right, okay, sorry, yeah, I forget you're younger than me.
Yeah,
so into the 90s, but that was still all possible then, and obviously a lot of it was on the foreign exchange side, and then since then you've had the experience on the running a separate kind of business of an academy, as you say, where we worked together and mentored a lot of students who went on to do. I know a lot of them did very well on the trading side, and then there's obviously been this opportunity then to effectively move into like asset management, right? And then that's brought a broader spectrum of asset classes to look at, equities, bonds, as you said, commodities, and still doing the foreign exchange.
Yeah, I mean, what I tend to find is the core principles. There are some differences within there and things you have to take note of, but the core principles remain constant. Sure. Of the kind of technical analysis, the strategy, and just the approach you take. It's kind of can be malleable to whatever you're looking to trade.
Yeah, 100%. So let's talk a little bit now about, obviously you've been working with TradeDay for some time now and mentoring our students. How do you feel all of that background sort of really helps you in the experience you've had with the prop trading? I don't like to say retail, because I know a lot of our traders are not kind of doing this they are doing it on the side, but a lot of them are doing it in a semi-pro, semi-am kind of way, kind of thing. So how do you think that's helped you moving to like the coaching and supporting these traders with the experience you've had, and what's been your experience with TradeDay on that side?
I think the way I look at it, trading is trading. No matter how you're doing it, the core disciplines and how you do it and how you approach it, and most importantly, how serious you take it, I think should be fairly consistent. So I do think where I'm seeing some of these guys from TradeDay getting value out of the sessions is in the fact that when I talk through how I feel when I'm in a trade, it's not dissimilar to how they feel. Yes. They get where the difference comes is I have those feelings, but I've been bred to not act on them. That doesn't mean to say they don't exist within me. No. And I think people really appreciate that. I even to this day, I only go into London 1 or 2 days a week. I'll work at home. I'll very often force myself to take my dogs for a walk, because that's one of my rule is if I've hit 2 down trades, I have to do something for an hour before I'm allowed to come back. Simple, stupid little rule. But I think people get value from the fact that yes, I'd never break a rule, and this is one of the biggest challenges I see in the retail space. Is I never, and the other guys, the other mentors at TradeDay will be the same. The reason we were bred not to break rules, because quite simply, if you break a stop loss level once in a bank, you might be lucky and get a written warning. If you break it twice, you're gone. If you weren't gone the first time. So it's not the fact that we we're so good that we've never broken them.
No,
we just like getting paid and keeping our job.
Yeah.
And when you come to trading late and you're doing it with your own money, sometimes you can think, well, if I move this stop, it's only a £50 or $50. You can sometimes think, well, I've got more than that in my pocket, but therefore I can do that. But the principle has to be, you do not break these rules. And often, where the other area I think people get value from it is the fact, a lot of the time, I'm politely pointing out things that they're doing wrong or could be doing better. They know that. But it's the fact that somebody else has told them, somebody's taken the time to look at what they're doing and are immediately seeing. And hopefully, and the feedback I've had from people who've had repeat, is that they're now thinking of the fact that, they knew it before, but now somebody's pointed it out to them. And now, so therefore it exists, and therefore it becomes something that they don't have a duty to be. I'm not their boss or anything like that.
No.
But it's creating that pathway of thought of, and again, when I have some people who come back, or maybe once a month, or sometimes there could be bigger gaps once a quarter. But what tends to happen is, I always ask someone who come back before you come on the session, email me your 10 best trades and 10 worst trades. And I want to look at them before they get on to just get best value out of it. It doesn't take me long to look at a trade sheet. But these sessions can give a degree of accountability that people don't originally have. Obviously, they've got the accountability of the rules of the company. Sure. But there is, for example, things like risk. There are rules within the rules. Yes. And that's what I think people need to understand and to start to formulate their own rules within the rules. It's something I've always done. I've always made my team do, because these rules, and I don't know, rules is such a strict word. Sure. But if we want to, if we want to succeed in anything, there has to be a pattern or restrictions within it, because they're there to protect us from ourselves.
Yeah, 100%. Yeah. And it's only with those rules that provide a framework, a strategy, and an ability to be able to test whether something works. If you're constantly allowing either the emotion or you're flipping the rules around, then and the boundaries and how you're defining, who knows what's working and what's not working, right? So you might go on a really good streak, but you've changed 3 or 4 things, and it may be that you don't know which one's working. And I think what's great that you've said there is, a lot of the time the trader kind of has a sort of understanding or a feeling what is not working. And it does take that external voice of someone who listens, understands, reviews, and kind of reflects back to them almost what they already know. But I think there's also an element of, sometimes there may be, let's say there's 10 things, the trader kind of knows 4 or 5 of them are good. There might be 5, they're not sure whether those 5 are good or bad, and sometimes it takes someone from the outside to say, well, 2 or 3 of those are okay, but those 2 you definitely want to think about looking at. And it might be 5 of the 5 that the trader's pretty certain are okay, that 1 or 2 of those may not be okay. So I think it's that external challenge and also external validation, as you say, which, as you say, anyone who's been in the institutional business has that layered on top of them by the fact that you'll either lose your job, or you lose a lot of money and you're on a warning, or, well, those are the 2 outcomes usually if you're doing something that's incorrect, right? That's outside of what's recommended within the institution. And that institution has got a lot of risk management stuff in place to protect itself. Otherwise, banks and asset managers or whatever they may be, hedge funds, go under, kind of stuff. And they have done in the past. And, I've spoken on other interviews I've done about, when those do break down at banks, Nick Leeson is a great example, but we've seen a lot of those over the years. I can't remember the name of the guy who was at SocGen, right? These bottom drawer trades. And
it was the UBS one as well.
The UBS one as well, yeah. So there's been plenty of them. So even those break down in these multi-trillion-dollar companies, so it's not surprising that we see them that break down with individuals, right? So I think it's a great insight, and it's clearly something that the trader requires and the trader is appreciative of.
Yeah, I think another area that I have always done with people who've worked for me that I've brought through, and I kind of emphasize with, as you know, I'm a very simple trader, really simple.
Yeah, you do.
From a
keep it very
technical analysis
simple.
perspective, very simple. When it comes to, I can't emphasize enough, when I speak to people in these, I really encourage people to share. I want to look at what they're looking at. I want to see what they're doing. I want to see the setup. But one thing I really want to emphasize is the fact that I really like looking at past losing trades, because so much can be learned from them. And this is an exercise I do myself. I sit down every 2 weeks. When I do a trade, I don't do a huge amount of trades per day, probably 2 to 5 trades a day.
Right.
But sometimes none. And again, this is another thing, and I think it was brought up earlier. One of the hardest things about trading is simply not trading. It's so hard. You turn your screens on, you look at everything for an hour and a half, and you feel you're duty bound. Yeah. But this is why there has to be kind of almost like a structured approach to the decision making, because that's there to protect you from you again. Yeah. But in terms of every couple of weeks, I'll look at my losing trades, because I've already lost money on them. I might as well try and get some value back out of them. It's gone. And it's incredible sometimes, even just after a 2-week period, you can see that every time I've traded the Dow this month, in this last couple of weeks, I've lost money every time. Quite simply, I'm not saying stop it, but pull the risk back, pull away from it. If I can see on my entry, if I'm using a price filter for my entry, and I can see that when I'm trading gold, typically I will, at this moment in time, I want to see it 5 points through my level before I'll get into it. But if I can see it's going 7 or 8 points reversing, no brainer, move it to 10. Because, and this is, not only is it, I think this is part of the kind of evolution. This is what's keeping me current with what's going on at the moment. Because this is allowing me to make these just I'm not ripping things up and starting again. No. And every change I make should be justified by the fact that had I done this over the last 2 weeks, last month, I would have been more profitable. Sure. And it's really simple. We're not like, I'm not using programming to do this. No. I'm literally just looking at a piece of paper, looking at similarities. Yeah. Again, things like, Trump is a nightmare to trade with. We know that, but we know that we've experienced it before. 4 years, yeah. Obviously, if I have a trade that Trump's come out and put a comment on, can I hyper-analyze that to be better? No. If I held a trade into payrolls, it went awry, then yes, that's on me. And from my background, that I used to get my best trading day ever was a payrolls day, but then which was possibly the worst thing that could have ever happened to me, because I then spent X amount of years trying to replicate that day
First Friday of every month for the employment report. Yeah,
absolutely. Yeah. And then I eventually sat down and looked at my P&L on the time. Oh my God, it was a horrible realization. Yeah. And from that moment on, I just went to the pub for the first Friday of every month for the afternoon. So quite simply, remove yourself from a vulnerability. Yeah.
Well, you always used to say at the academy, right, the worst thing that could happen was when someone came to the academy and their first trade was a winner. I mean, because there's an immediate euphoria, and there's associated with that, there's an attachment to that euphoria. And then there's also a belief that it's kind of easy, that's the way forward, whatever I did then is right. But that's one data point of one data point, at that point you have. And it's similar to with your employment, you made money on that day, so you associate that with, that's how I make money in trade, where it was one data point, right? Yeah.
Absolutely, yeah. And it's not trading on just on payrolls. There's too many variables. You've got average earnings. You've got the revision. You've got everything being thrown at once. Yeah. I've sat many years before I stopped. Gone into the payrolls. Guy who works for me to my right's long, I'm short. A few minutes after payrolls, we both lost money.
Yes.
What is the point?
Yeah.
So therefore, I think the TradeDay rule is spot on.
Yeah, no data.
Reflect on it for a few minutes, then come back to the market.
Yeah. So a question here then, I mean, from both the mentoring but also personal experience, I mean, what is the kind of the 1 or 2 or 3 things, I'm not going to pin you down to that, how many, but that you see like problems or issues or challenges that the traders you speak to face, and from you're facing these ones. You just said to yourself, you're still learning today, still looking at the losing trades, and still tweaking, because there's not one strategy that's worked from day one and still works now, right? Some strategies work over time, but they have to be adapted and changed, because the markets are always changing and adapting, and we get different volatility points and different nuances to markets. So the question really is, from what you've experienced both in your personal trading, with your institutional trading and that historic background, and also on the mentoring, what are the 1, 2, 3 things that come to the fore that you see replicated in mentoring, that you see yourself making maybe causing problems for yourself, or challenges that you would go to and say, to pass a prop trading challenge tomorrow, these are the 2 or 3 things that I would say you just should start and do?
Top of the list has to be risk. It has to be. It's no good. What you just, the last thing you said about if you were going to a prop, because many of the people I speak to when I'm doing this, their ultimate goal is to get funded. Now, and I've actually sat in the position of people sitting in front of me who want to be funded. Now, the first question I have when somebody comes to me wanting to be funded is, okay, show me a year's money, show me a year's record. I want a minimum of 6 months, but ideally I want a year. And the first thing
7-day challenge at TradeDay, and we're told that's too long.
No. But obviously the first thing I'm looking at is, where is my money vulnerable here? People always champion the good days. What I care about is what's the worst day? 2, how does this person react when they go on a run of losing days? How long does it take them to dig themselves back out, or how far do they fall below before they get there?
So it's kind of the drawdown, and then how do they recover from that sort of drawdown?
And again, this is something I speak to guys at TradeDay about, and they're quite surprised by it. So, for example, one thing that's firm, and I touched on this a moment ago, was risk. I start with whether it's not necessarily TradeDay, start with, I have an annual stop loss. I then bring that down to a monthly stop loss, then bring it down to a weekly, daily, and then trade. So, and no matter what I'm trading or for who, I'm working within that. So therefore, it allows me to accommodate X amount of trade. If I want to have a minimum of 3 trades in a day, then my daily stop loss has to be split 3 ways. Very simple. That allows me to have multiple goes, because ultimately, with what people struggle to understand is, even I class myself as a good trader. I'm not right all the time, anywhere near it. From a risk reward perspective, my risk reward is whichever, some people call it 1 to 3, some people call it 3 to 1. In short, I want to be making a minimum of 3 times what I'm risking on every trade. And that doesn't, and obviously that sounds amazing to be looking at that sort of level. But it's also very restrictive. It really is quite restrictive especially for intraday trading. To be bringing home that profit, it has to be realistic. But what that allows me to be is wrong, because the fact of the matter is, I am going to be wrong. It's how it allows me to recover from being wrong. Get one trade, let's just say I'm doing 3 trades in a day, get one of them wrong. That's okay. One trade right, and I'm comfortably in the money. If I get half my trades right in a month, I'm doing all right. I like to think I can get more than that, and if I do, wonderful. But I'm not putting the benchmark too high on it. Another thing that I tend to go through that people struggle to get their head around, and it's something that I've always done and I've always encouraged people to do. If I have 2 down days in a row, and I'm talking about hitting my own maximum stop loss, I will then reduce my risk by 50%. I don't have to, it's not part of my rules or my trading mandate or anything like that. But it's like anything in life. If things aren't going well, just don't keep throwing money down a hole. And people think, well, how am I going to get it back? find your own form first and earn the right. So, and I will go down to a quarter of risk. But as you know very well, when the market goes to high volatility, that's something as traders we should be doing ourselves. If we're in a heightened volatility period, go back to the start of all this tariffs and the liberation day from Trump, you only need half or even a quarter of what you would typically have in it to make. But what you're doing is you're protecting yourself. You're protecting yourself from these dramatic downturns, and also you're showing disciplined behaviour when things aren't going for you. I said a minute ago when you said about if I was looking at someone's portfolio for a year, I want to see how do they react when they've had 2 or 3 down days. If they just keep chucking money at it, and then 2 weeks later they start smashing it, and that's great. Okay, what happens if they don't have this period? The money just keeps on going down here. I want to see control and control is, it sounds boring, but this is a job at the end of the day. And if we want to be successful at something, we have to create rules, boundaries, controls, if we want to have this steady appreciation.
Yeah. I think it's a great, I mean, what you said there about, reducing your trading size when it's not going well, and so few people do that, so few traders do that. It's hard to do because the natural instinct is, I've lost that. In fact, often the natural instinct is, I'm going to double up, right? That's the classic, kind of thing is I've lost this amount, now I've got to get that back to be at break even. And the easiest way to get it back is to effectively trade more, trade bigger size, and the actual approach should be less. And I always think of it as like a sporting analogy. If you're the manager of the team and your star player's not playing well, you might give him a couple of games, but at some point he has to be substituted and take a time on the bench or take some time in the reserve team and then build himself back up again to get his confidence back to a level where he is performing again at the right level, and producing. And that's what, as traders, is a similar sort of thing, right? Parry back when it's not good, recuperate, get it going good again, get those good habits going again, and then leverage up again once you're in a position of actually attaining. Because we're all going to go through times, and it's sometimes difficult with the strategy to know, is it just the blip in the strategy, or is there something going wrong with the strategy? But either way, that's not a time to be, as you're saying, put more eggs in the basket. It's taking the eggs out of the basket.
No, absolutely not. No.
So that's a good point. So at TradeDay, Duncan, we are really looking for traders. The whole point of the business is to look for traders to have long-term success and longevity in the markets, long-term profits, large profits, hopefully. And that's the way the evaluation and the funded challenges are, the evaluation challenges, and the funded SIM and funded live accounts are set up to encourage that. And that's what we're really looking for. And we've had a great example, that we have the video out there on social media of Tyler, who took his account up to $100,000. He managed to take 50, 60,000, I think, out from that account. And so I guess when you've mentored and then thinking about it from your institutional background, and obviously we don't have, obviously in the institutional side, there's no evaluation and then going into a payout scenario, but in a funded account.
Bonuses.
Bonuses, I guess there
it
are.
does exist, it's just in a different way.
It's a different nuance with a bonus, right. Yeah. So, but I say, what would you say, what we would really want to see is, the same processes and strategy. What would you say, what kind of advice would you give on a trader passing evaluation and then moving into that sort of funded account scenario?
I think the key is risk management and consistency. Obviously, they should have been using risk management throughout the process, and the consistency of trading in the way that they were doing before. Nothing changes. I often hear it's completely different. It's not complete. The market's the same market. You have a process. You have a rule over how much you're risking. You have a process of what happens when you get in. Yes, you can feel it in your stomach that little bit harder when it becomes a bigger amount of money, but the approach should be unwavering. They really shouldn't be any different. And also, I always used to get when I was at the academy. The question was more along the lines of going from trading a sim to going live.
Yes.
But really, there shouldn't be any difference. It is just a matter of following the process. Yeah. If the process, and then after a period of time, if the process isn't working, look at what you're doing. Which particular area of you, is it your entry? Is it your stop loss? Is it your target? All of these things should be consistent. It's just about being realistic. And the reason people get so caught up in it, and this is what I've seen from my experience, both with TradeDay and with in my professional life and when I was working in trading education, people change and do things differently.
Yeah. And
then blame the fact that, oh, it's because it's live. Yeah. It's not because it's live. No. It's because you've changed because it's live. Yeah. You've lost a bit of money. You've either gone completely protective, or more than likely you're swinging the bat and trying to make it all back. Yeah. And then they're looking to blame it. Yeah. But it really, if you're honest with yourself, if you're honest with the way you're doing things, there really shouldn't be any change in the process.
Yes.
How you deal with it psychologically, that can be different, because suddenly when you're seeing it. But if you have a rule, you should be prepared. If you set yourself a day, or TradeDay set you a daily stop loss rule, you should be prepared that that's going to happen. It shouldn't be a surprise when it happens. There are going to be things that come up in the market that's going to force that to happen. And yes, I appreciate it's not easy, but you have a plan B, just like I mentioned a moment ago. If you have a day or 2 days of that, how do you react the next day? That should be, I mean, I say this like I have a strategy that's written and programmed. I don't. No. I just have a loose set of 5 rules that I want to see before I go into every trade. Yeah. It doesn't need to be more than that. Yeah. I would say the key thing is just keeping the consistency, and don't allow yourself to look for an excuse. Yeah. Yeah. Because a lot of when we hear it's different, it is an excuse for a different behavior. Yeah. And again, I'm saying this from the experience of looking at what people are doing. Yeah, yeah. And often when I really do, when I have calls with people, I like to look at the charts, and I'm doing it in a really friendly way. I'm going through, and you can always see people are rushing to get to I'll show you this trade. And it's often a case of, can we just go back? Can we just have a look at that? Oh, don't worry about that trade. Don't worry about that trade.
Yeah. Like brushing under the carpet.
But no, let's worry about that trade. It's not like punishing a dog that's just peed on the floor.
No.
It's about going, look, right, you don't want to show it to me, so you're ashamed of it.
Yeah.
What are you doing now to protect yourself from doing that again?
Yeah.
How can you tell me, and more importantly, tell yourself that you're not going to do that again?
Do that again.
Because it's that is the problem. Yeah. It's this lack of discipline and this breaking a rule that they know deep down that they definitely shouldn't have done.
I see it a lot on, like, when we look at traders' reports, and what we see is steady, boom, this huge trade where the discipline's gone out the window, or the risk has gone too high, and there's a load of consistency, and then it all seems to fall apart, on maybe 1 or 2 trades very quickly. Yeah. So I guess, again, going back to both the institutional trading experience, there's 2 questions here, I guess. One thing we see is, like, maybe that big drop off we see is because people are taking too much risk, or they're moving their stop away, which is the same thing as sort of taking too much risk. So, I mean, what would you say? Have you got any thoughts about how you could maybe help? And maybe this is more something on the psychological side that that Mike Turner, the mentor, could help with. But I'm sure you've got some thoughts on this. But what we do see is that going from the evaluation to the payout scenario of a funded account, we see traders swinging for the fence, and that is like a changing strategy. Is there anything you can think about that, or could relay on when you've mentored, that to sort of stop that behavior maybe? Is there anything you could think about? And then also the other thing I was going to ask is, and you said there about that sort of difference in the stomach from it being like pretend money simulation environment, which for our traders will be on the evaluation, and then even though it's in a funded sim, it's still there, it becomes real money for the traders. I mean, the thing I think about, like, from your experience would be, there's a lot more zeros when you were trading, say definitely on the FX side, where we're talking tens of hundreds of millions of dollars.
Yeah.
And then even on the asset management side, where the numbers are probably as big or, around those kind of numbers. I'm wondering, is there anything you can draw on that helps you, there's that, they're taking that psychological leap up into a payout scenario that maybe, and you're dealing with a lot of zeros, which, can be a big burden, that you can think about how, that could maybe help some of the traders.
I mean, the obvious thing is to just think of it as a percent.
Yes.
That's the most logical. But let's not pretend that we can't still see the zeros on the screen.
On the P&L.
That's the hard thing.
Yeah. I've often said that. Don't look at the P&L.
Yeah.
Look at it as in whatever you're trading, pips, basis points, ticks, index points, whatever it is. Just think about it as those numbers, not on the actual hard dollar amount. Yeah, but sorry, carry on.
But no, it is just kind of believing in the process.
Yeah.
We will go from, like, I remember when I sat down on my first day, my boss said, you have to have £500,000 worth of cable, which is sterling against the dollar in. You have to have it in it for the whole day. So I could be long of it, I could be short of it, but I had to always have $500,000 in it. Right. And for me, that was like, oh my God, this is incredible. And whichever way I picked, it went the wrong way. But for him, he knew, and this same boss, he actually had a very good approach here. He was like, in this year, if you break even, I'll be over the moon with you.
Yeah.
Because it shows that you, obviously, what you just didn't want to see is just be throwing money at it. Yeah. But sorry, I've deviated from the question completely there. But yeah, it is just it's progress. Yeah. But the way kind of I trade, the process is the process. The rule is the rule. The rule for the entry is there. The rule for the stop loss is there. Yeah. So for example, my stop loss always has to be technical. It's never monetary. Yeah. My target, as I said, is a 3-to-1, but it has to be realistic. It's not just a case of, well, I'm risking 50 pips, so therefore it needs to be 150 pips. I need to be looking at it going, is that going to be
possible? Yeah.
So therefore, no matter what market I'm trading, no matter what time frame I'm trading, the rules there should be this consistency, and therefore the amounts increasing, and they have done for me over the stages of my career. Yes. It is just a case of something you have to get used to. It's part of the process. The lows are low, but the highs are bigger. Yeah. But the main thing is that the consistency and the growth of the P&L is relatively steady. Yeah. It is a tricky thing. But ultimately, if we want to make it as a trader, we have to be the hard work on having a decent approach at how you take a trade, how you react to it. These are part of the skills. Just like any job, it's part of the growth period that you just have to push through. You have to get used to if you want to go up. But obviously, there has to be a kind of disciplined approach. Obviously, there's an accountability to TradeDay, but I would thoroughly recommend that every trader has a rule within your rules that allows them to have this approach. And often I kind of see, I would say, have a bit more respect for your account. Yeah. Ultimately, yes, people can just blow an account and start again, but push through. Just don't get to that last bit. Try and fight back from it. Don't be prepared to just go, right, I'll start again. Yeah. It's not the right time, because if you do that once, you'll do it time and again. So just be prepared and be disciplined. Like everything, work hard. You will get there.
Yeah, I think there's some great insights there of, as you say, it's about the process. And I like the way you said, like, you do keep it relatively simple on the risk management side, relatively simple on the technical analysis side. And you said, I haven't got like a hard and fast, but you've got your 5 things you said there. Like, you've got your 5 things, and there's some fluidity in those, in that, if I have to change the price filter or whatever it might be, you can adjust that to suit market conditions or to suit maybe the asset class you're trading. And there's always an adjustment, to some respect for the market, and slightly adapting your strategy, which is that really, you know, that it's a strategy that's semi-written, unwritten down sort of thing, but you've certainly got it, and you are steadfast, you know, and I've known you a long time, and I know how disciplined you are and how steadfast you are, and there's times when you've cut positions and I was like, oh, you could just pull that stop back and you'd be a little bit all right, and you're like, no, this is my rule, I'm out, I'm done. I'm like, oh, you know, I would definitely not have done that. And most of the time you're right to have done what you know, there's old saying in the market, right, the first cut is the easiest cut, you know, it's the least painful cut. And yeah, I mean, I think, you know, there's really sound advice there, and you know, it is about strong risk management, discipline, working hard. You say, you know, you had to go and do that breakfast run at 7 o'clock, you know, for quite a few years, or however long it was, 6 months. But that's that kind of that willingness. I know when we spoke to Sean, he was talking about having mentored one of our traders, and he spoke about, you know, that willingness to engage, the willingness to learn, and the willingness to play structure, and at least try to stick to that structure. And it's all what you're kind of pulling in there with your like approach to strategy and risk management. It's great stuff. So yeah. Duncan, it's been a pleasure to speak to you. Good to see you as ever. And all you guys at home, make sure if you need some more work on your risk management, more discipline, better approaches to strategy maybe as well, then Duncan's your man. Yeah, sign up for one of our mentoring sessions. Thank you very much.
Thanks, sir.